good morning. Welcome to Power Breakfast. We are in the Mumbai News Centre. I'm Nigel D'Souza, and with me is Ekta Batra. Hey, Ekta, good morning. Good morning to all our viewers, and wishing everyone a very Merry Christmas. On Christmas Eve, Ekta, we are here. Let's hope this day passes by fast, and tomorrow's Christmas.
Yes, absolutely, Nigel. Merry Christmas to you. I'm sure it's a very, very special Christmas for you as well. But nonetheless, it's quite a busy Christmas Eve for us in terms of the markets. We have a lot of news to reckon with today, especially from the GST front and more. So let's get going in terms of the top stories that we're tracking this morning, and then we'll get you all of the news and cues you need to watch out for. US markets plunge on Friday, posting its worst week since the financial crisis in 2008. Dow dives 400 points. Nasdaq enters bear market as the government shutdown looms.
And Asian markets trade with caution amid political instability in the United States and lingering fears of global economic slowdown.
Indian equities take a sharp knock on weak global cues. The Sensex tumbles 700 points and the Nifty closes below 10,800. SGX indicates a negative start.
And in its 31st meeting, the GST Council cuts rates for 17 goods and services taxes, such as television, movie tickets, video games, among others. Now only 27 items remain in the highest tax slab of 28%. The total revenue impact from the rate cut is 5,500 crores for the full fiscal. Well, Asian markets trade cautiously after Wall Street sell-off last week. The Kospi is the one we're looking at because the Nikkei is shut today. The Kospi is down close to around 0.5% odd. Now, in fact, it's pulled back from the low point of the day. But otherwise, trading volume will be lighter. But most of those markets that have opened up with some red of around 0.3% to around 0.5%. The SGX Nifty, though, remember the Nifty ended with a cut of around 200 points in Friday's trading session. The SGX Nifty is indicating maybe a bit of red just to kickstart trades. So 15 to 20 point downtick is what we're bracing ourselves for.
Okay, well, let's tell you about what took place in the US markets on Friday. US stocks closed steeply lower on Friday as investors remain gripped by a fear of partial government shutdown in the US. Rising interest rates as well as a slowing global growth. So the Dow posted what was its worst week that we've seen all the way since a couple of years, while the Nasdaq entered bear market territory. CNBC's Eric Chemi gets us a wrap of all the action that took place on Wall Street.
U.S. stocks sliding late in the trading session with the Dow off 414 points, the S&P down 50, and the Nasdaq lower by 195. The U.S. economy grew less than previously estimated in the third quarter. Gross domestic product increased at a 3.4% annualized rate, the Commerce Department said on Friday in its latest reading of third quarter GDP growth. That was slightly down from the 3.5% rate it had estimated in October. Meanwhile, White House advisor Peter Navarro telling a Japanese newspaper that he doubts a U.S.-China agreement will happen in the next 3 months. That helped push stocks to session lows. Navarro was also critical of the Fed's interest rate forecast for 2019. And General Motors has hinted that it could negotiate a way to keep one or more of its plants open. Last month, GM announced plans to halt production at 5 North American plants. But now the company is saying those closings are a matter of negotiation. The automaker has been the target of public outcry since those plans were announced. Although the stock is up about 5% over the past 2 months, that's well outperforming the broader market. That's the action from the U.S. market. Back to you in Mumbai.
Okay, well, that's what took place in the U.S. But on that note, let's get in some opinion from Hamid ElErian on the sell-off that took place in the U.S.
For years, we talked about this notion that the markets were going up while the fundamentals were sluggish. And what was the difference? Central bank liquidity, predictable and ample. Now, even though the fundamentals are improving, because the gap is so large, the reaction is excessive. This is a technically driven sell-off. Having said that, I have seen technically driven sell-offs overshoot by quite a bit. So that's really important to remember. What seems irrational to people out there is not at all irrational. It's money coming out of the asset class, it's people repositioning, it's people saying it's about preservation of capital, the return of my capital, not on my capital. So So first thing is don't underestimate the extent to which technicals can dislocate markets. I worry about the trade, the rest of the world versus the US. I think that in a downturn, the US has much better shock absorbers than the rest of the world. And EM, really? I mean, high yield in the US is cheap relative to EM today. So one has to be really careful about how to navigate this.
Well, turning attention to the European markets, they ended with modest gains on Friday, though sentiment remained fragile post the Fed rate hike and escalating risk to the economic growth as well. Those markets, remember, they ended in the red, but at that point of time, even the Dow was trading with some gains. And then after that, in fact, the Dow did see a sharp correction from the top. The Italian markets, though, they were underperformers. They ended with cuts almost of around 1%. Weaker economic data, that's what spooked that market. So it ended with a cut of around 180 points out.
Okay, and in the currency space, we have the dollar, which weakened as political uncertainty added to risk aversion.
The US currency hovers around the 3-month lows, while the Japanese yen gains as demand for safe haven rises. And in the world of commodities, then crude oil prices trade lower after shedding almost 11% in the past week. Sharp sell-off in equity markets and oversupply concerns weigh on sentiment out there. Brent crude prices now down to $53.50 per barrel.
We do have to remember that in October and November, the three major producers of the world, which is Saudi Arabia, Russia, US, were producing at very high levels. I mean, they're all producing record high levels of above 11 million barrels per day. So that already kept the market oversupplied. And I think over the last month, the strong US dollar, the weak equities market, partly because of the Federal Reserve interest rate hike, I think all just put pressure on oil prices. And we did see oil prices, both NYMEX and ICE Brent, lose like a third of their value within like 2 or 3 months.
Okay, well, let's move on to some other news. In fact, this is some really tragic news. A tsunami triggered by a volcanic eruption killed at least 222 people in Indonesia over the weekend. The tsunami swept away hotels, hundreds of houses, and a group of people attending a beach concert. More than 800 people have been reported injured, according to the Disaster Management Agency. At least 28 others were missing, but the toll could continue to rise because some areas had not yet been reached. 18. Well, back home on the Wall Street, the markets in fact took a sharp knock and benchmark indices wiped out gains for the entire week on Friday. The Nifty tumbled 200 points to end below the 200-day moving average, barely holding on to that 10,750 mark. The Sensex shed around 700 points. The Nifty Bank tumbled 400 points to end below 26,900. Well, what does the setup look like today, Nigel? It doesn't look too good with the global sell-off and, the SGX currently indicating a soft start.
Absolutely, Ekta. If you're looking at the US markets, they were sharply lower last week, anywhere down between 6 to around 8%. And the two headline numbers really are making you very, very cautious. One is that they had their worst week that we have seen all the way since 2008, and 2008 really wasn't a very, very good time for the equity market. So we did see last week, in fact, the Dow had its worst run in the past decade. Not just that, if you're looking at it in terms of December, they've had the worst December since 1931. That's since the time of Great Depression. So clearly, the mother market doesn't do well. That will put pressure on us. And that's precisely what happened. So after doing a relative outperformance, the Nifty underperformed in Friday's trading session. It was down close to around 200 points. And there was selling across the board. The mid-cap index as well did see selling. And the problem is that the two pillars of the market, they cracked. IT did see a sell-off. We had the Nifty Bank as well that was under pressure. And that doesn't give the bulls much of a chance. Remember, you were doing a relative outperformance, but post-Friday sell-off, the Nifty ended in the red for the week as well as for the month on the whole. And I was telling you that the two pillars of the market were selling off. Well, Reliance Industries, ITC as well as L&T, all of them ended with sharp cuts. And that's what really made the bulls throw in the towel. The breadth of the market wasn't great. 3 stocks declining for every 1 stock that was advancing. And importantly, the Nifty ended below the key technical level. It broke the 200 DMA level, and in fact, it ended below that as well. We're looking at flows. You're wondering who was the big seller then in Friday's trading session. The FIs, in fact, they bought 130 crores odd. The DIs, they sold roughly around 500 crores odd. So net-net, there was an institutional sell number of only around 300 crores. But it appears that the FI gross sell number was rather large. That was close to around $1 billion odd. And, if they net bought, then they gross bought as well a large number. But the $1 billion that they sold, that seems to have put, telling you there was some kind of a churn that was seen in the markets. Across series, in terms of what happened in the futures and options space, there was unwinding on the Nifty future. There was rollover, actually, because this week is the expiry. So both on the Nifty as well as on the Nifty Bank. But you're looking at, the premium on the Nifty, it came down from around 25 to around 13, telling you there was some shorting at the top. And that's precisely what FIs did. They added 5 shots for every 2 long positions in Friday's trading session. So they were shorting at the top, and the signs were there that we could see a bit of a correction. Not such a large correction, but the signs were there because the PCR had moved to around 1.65 odd. We have seen that whenever it moves to that range of around 1.65, 1.7, from there we see a bit of a correction, and that's precisely what happened. So the PCR is back down to around 1.3 or sub those levels. The FIs in the futures and options space, I said, they added shots. Well, they bought puts as well big time. And in case things go wrong, there is cushion on the downside. Not just that, the problem was that they were unwinding some of those puts they were writing. So if you're looking at the 10,900 put, that saw a good amount of addition when we were in that uptrend. The 10,800 put as well, that as well did see some shedding to the tune of around 32 lakh shares. So let's get straight then to the technical levels and the levels that we're looking at. We broke the 200 DMA in Friday's trading session. Now today, in fact, the SGX Nifty suggesting we're likely to start off with a cut of around 15 to 20 points. So we can recover from there and we can clear the 200 DMA, not just marginally, but maybe 50, 100 points above that level. Then the bulls will feel good. Otherwise, it's going to be a bit of a problem, Ekta, because this week is expiry week, so expect volatility to pick up. Yes, a lot of traders would be going on holiday, but F&O expiry always calls for some action. But the Forex market, well, they're luckier because they get more number of holidays because the banks will be shut more number of days. So maybe there should be some calm out there. The rupee ended off its lows in Friday's trading session. So we'll keep an eye out. 200 DMA, crucial mark, 10,766. We're trading below that level. Let's see whether or not we can see some bit of recovery from the lows today.
Yes, and we'll still have stocks and news.
Absolutely. There are plenty of stocks and news. So on Saturday, our team was working. We were looking at the GST Council meeting. A couple of sectors, they got a boost. Your cinema tickets, well, if they're priced over 100 rupees, the GST rate has been brought down from around 28% to 18%. So as a user, you'll be quite happy. But not just that, PVR and Inox as well, both those two stocks will be in focus. I was reading a note that came in from Aquarius. They said that this particular development will be very, very beneficial for the entire film value chain. So keep an eye on both those two stocks. And PVR will be looking at, because they've disclosed over the weekend, that they'll be looking at some kind of issue and maybe some kind of dilution to the tune of around 750 crores. The market capitalization is around 7,500 crores. But they're saying that it may not happen at one go. It could happen in tranches. So keep an eye out on PVR additionally because of the GST boost as well as this piece of news. Well, then we're looking at, in terms of the GST Council meet, retreaded tires, they have got a bit of a boost because the rate has come down, GST rate, from around 28% to around 18%. Aquarius says it's a mild positive because now it's giving the organized retreaders a bit of an edge since, it contributes nearly around 50% of the total retreaded market. And we're looking at a stock, Indag Rubber should be a stock you should be looking at. Moving on, then moving away from the GST Council meeting, the Madras High Court has rolled back the NGT order, so that will not be good news for Vedanta. Remember, the stock was at around 200 rupees. Last week, when they got that relief, it went up all the way to around 215 to 220 rupees. It's back down to 200 rupees. Not great news. Anyways, no one was really factoring in any kind of numbers from the Studio Korean plant in FY19, but negative news nonetheless. GE Power, they won an order to the tune of around $160 million. So good news for them. Stock should open up in the green. Zentech, well, the stock has seen a bit of a run last week itself. They have a board meeting on the 27th of December, and they'll be considering issue of shares, warrants, as well as on a preferential basis. So let's keep an eye out on that stock as well. Unichem, they've got an ANDA approval for one of the from the US FDA for one of their drugs. So keep an eye out on that stock. And ENIL, well, they're done entertaining India. They're saying that, in fact, they're looking at the United States market, radio market as well. So small development, but keep an eye out on that one as well, Ekta.
Okay, all right, Nigel. Thanks very much for that. So those are all the stocks you can watch out for and trade today. Time for a break now. But up next, GST rates slashed for about 23 items. More on that big story once we're back. Stay tuned.